Hello, Maverick traders. Welcome out to your market roundup, June 12th. Corey here with you. Let's jump right into it and take a look at markets. A nice update today to start the week. You can see it was pretty broad. The Russell 2000 lagged at up only 0.4, but the NASDAQ 100, once again, big day, up 3%, S&P up 2, Dow up 1.5. Oil was down sharply, and oil was down on an increase in production out of Russia. This offsets the Saudis cutting production, and there's a little bit of a battle going on there in the oil markets. Markets are also rallying into the CPI number, and if we look at the CPI, it's expected to drop down to about 4.1%. However, if you notice, it's a huge drop from prior number, and that's because if we look at this month over month number, the largest bar on there was last July, and the I guess third largest was in June, and we're going to get rid of that 1% last June and add in a much lower number. So you know CPI is going to take a huge drop, and then next month a big drop as well, and we're going to be back in the threes, and everyone's going to say inflation is behind us and the Fed's done their job and they're not going to raise and so on and so forth. So that's part of what the market's rallying into. The question is, as this good CPI number comes out, do you want to be buying on the good news, or is that the exhaustion high? And I mentioned a couple of weeks ago that I felt like the market high could be around that time, that when that quote unquote good news hits, that could be right around where the market top is, because we probably rally in anticipation of that good news and probably dump stocks and sell off as the general public comes in and says, "Oh wow, inflation's gone. It's going the right direction. It's not a concern. Oh well, I better buy." And so the unsuspecting public will be the Johnny-come-latelys, and unfortunately will be left holding the bag. That's kind of how I envision it working. Advanced decline line, about 60% of stocks going up today, and the 50-period moving average continues to improve, 60% now above that. So let's take a look at a couple of items here. The S&P, I mentioned last week, I felt like the NASDAQ was already in its exhaustion phase, and the S&P was entering into something similar, and I think that is true. I think we're still in that phase where I would call it the late innings of this rally. So the S&P wasn't really where the NASDAQ was in terms of the big exhaustion signal, but this helps. Notice how it's now very much like the NASDAQ making that parabolic turn. It should have kind of a big exclamation point here, kind of a big candle, a gap up tomorrow, something like that, that could signal the end of this run. Similar to the NASDAQ. Now, the NASDAQ is stretched a little tiny bit further. I feel like we're at the exhaustion, but that's not uncommon if you haven't had your divergence yet. And one of the only indicators I use, I don't really use indicators as a general rule. One of the only things I will utilize is an RSI like this for divergences when you've been in this quote unquote exhaustion kind of blow off top phase or blow off bottom, where basically it's this period of time where something has run too far, it's been overbought for an extended period of time and such. Now remember, the RSI is tricky because overbought, I call it overdrive. When you first get overbought, usually you explode higher for a while. The next couple of weeks are great, and boy was that ever true. Don't think for a second that when you first go into overbought or oversold that you should just immediately reverse. That's just not how it works. In fact, you should probably play it as a breakout. Sure enough, it went into overdrive over the next few weeks. So perfect signal, perfect higher highs in the QQQ met by higher highs in the RSI. Everything looked good. Everything looked fantastic. Everything looked in place. But now, lo and behold, we're going higher in the Qs, and the RSI line is certainly off of the highs. Do you see how higher highs in the price and lower highs in the RSI? And that is the classic end phase of something that has been in an overbought or oversold condition for some time. That is perfect. That's picturesque. So usually with an exhaustion idea, concept, it's not really a signal to aggressively bet against something. It's more of a take profit, right? So in the QQQ, I've had bullish positions on and such. I've had a bullish position on in IBM and others. Well, anyway, I took those off. I've locked in some profit. So did I see a lot of upside from today's move? No, I took profits on another tech name, a VMware, VMW, and some other things that I've had on. So anyway, I'm still in that taking profit. But what I haven't done aggressively is really bet against this. And if you're going to stick your neck out there and short something that's going up, first of all, really think about it a second time before you do that. And then as you're about to trade, well, think about it a third time because you don't want to bet against something that's in a strong uptrend as a general rule, right? You might even up, you might take some profits, you might do some things, but that doesn't mean you short. That doesn't mean you go the other way on it. The only way I'll do that and um, and really risk something in terms of the trade is probably if we get something like this, where you get a big divergence. And then I consider sticking my neck out there. So could I do something more aggressively bearish? I mean, you could do some little, risk $100 to make $100, some low risk, what we kind of consider a weak, wimpy trade. You could do that on anything, but I'm talking, would you really put on something where you're expecting some considerable downside and have a big reward, big risk type of scenario where you need the price to go down? If you're going to stick your neck out there, you better have a lot of reasons to do it, and this would be a very good one. So overbought for a long time, feeling like we're in the classic exhaustion phase, and then that RSI divergence, and you're checking a lot of boxes there. Now, as we look at the heat map, again, NASDAQ, maybe we finish where we started. That should be sort of how this works, is that the leadership group kind of exhausts first and starts to lead us back down. Energy, just I mentioned this a week or so ago when oil couldn't hold its gains with that Saudi Arabia production cut. That was a market tell, and I just wouldn't trust energy. I took off a trade that I had on in XLE, and you got to be careful there when it couldn't rally in good news type of dynamic. That's a little bit of a telltale sign. Otherwise, a little bit of a mixed picture. There's a lot more red on here than you'd kind of expect to see on such a good day. But again, it's the important stocks. The biggest boxes are all green, right? So that's why the market went up much more than just a big broad-based rally. It was actually, only 60% of stocks advancing, but the most important in terms of market cap were certainly doing so. So it was a nice upside day. NASDAQ specifically up 3%. As far as outlook, it checks the boxes of being an uptrend, but again, I mean, you're above the 20, above the 50, they're upward sloping. This is a time where I've already mentioned this last week. I've started to even up the books, started to add in more bears, and just basically adjust from what was a very, very bullish stance for me for the past few months. I stayed the course very well. Bullish, 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 saying watch for the exhaustion, watch for the exhaustion. I even joked that you're probably getting sick of me saying stay bullish, but watch for the exhaustion. Well, I think the exhaustion is essentially upon us. Now, again, that might not be helpful for someone that has a very short time expectancy. I mean, if you're betting on where the stock is going to be over the next week or so, like I said last week, it's still somewhat of a coin flip to me as whether we're at that tipping point. I don't know where we're going to be over the next couple of days. I'll just say that up front. But I feel like I have a good idea that we're going to have a good size give back over the process of the next couple of months. So I am certainly in the camp that we're reaching the final phases of the rally. Whether it's now or a few days from now, a week or two from now, I don't know. But the final phases of that, and that we should see a considerable give back in the S&P, probably led lower, frankly, by the NASDAQ and some of those areas of the market as well. Now let's look at some potential ideas. I mentioned bullish ideas in IBM, so I want to update. I've personally taken profits. It was a home run trade for me in terms of the bullish trade and the expectations and just the rate of return and such. At this point, I've taken it off, and I would consider IBM as a good candidate to get back in, but I don't really trust upside breakouts when you have a lot of overhead supply and things. So I'm still in this camp where I wouldn't short it by any means, but I think the market is going to have some give back. And when IBM does and things get a little rough, I think it's one that you could consider as an outperformer and maybe a re-entry down the road. But I really wanted to update that I took profits in that one because I'd been touting that one for a couple of weeks. Now, Garmin, you can see here this little area of breakout. This one has cleared all resistance. It's at new highs, bullish engulfing formation. Do I trust it? I don't know. It's hard for me to aggressively buy anything right here, right now, but could be a consideration. Walmart, another one. You look at the relative outperformance of Walmart to Target, and it's impressive. And then Walmart, again, you might have a little pullback, but it would set up as a little mini cup and handle or some type of idea like that. Again, outperforming its peers, relative strength, some of the things that we look for. Now, on the bearish side, maybe I'm a little more interested in adding here. I've been adjusting the portfolio, taking off some of my bullish trades, and just slowly adding in a bear here or a bear there. And actually, they've been working. The things that have been in these downtrends, for the most part, I think 2 out of 3 bearish ideas from last week or went lower and are still down from last week's price action. Abbott Labs was one, ABT, and so forth. So I think in terms of ideas, Allstate sets up. You can see the crossover, the bearish crossover here in the moving averages. We had made a lower low. We should be in the process of setting a lower high and then making another leg to the downside. So Allstate checks some boxes. Dominion Energy, this is a utility. Look at the old levels of support kind of acting as the new resistance. And I don't look at support and resistance as though it's a solid foundation. I look at it like it's a trampoline. When you land on a trampoline, it gives and then it springs. And so it's sort of a squishy mattress. This is an area. This is a whole area in here. Now, as we came down and we broke through this area, it plunged lower. As we come back, we kind of squish into it like a trampoline, and then it springs us that way. Looks like letter D, Dominion, should be moving lower. And then ExxonMobil, again, I highlighted this one last week, and I think this one's basically flat, actually. Not really down, but still think it should be worthy of consideration that this energy sector is a little tepid here, a little bit on the wrong footing as far as the markets are concerned. You got oil prices going lower. You've got potential economic slowdowns that I think are still looming, and this is just not the place to be right now. So you've got some lower moving averages. They're kind of choppy and sideways, but I sort of suspect that this is a little inverse cup and handle type of idea, and this may be headed right back down towards 100. And if it gets back to 100 again, it's probably going to go even lower than 100. So some of these areas of the market that just aren't acting right, relative weakness, we've got to consider them as candidates. Now, as we look at the markets, QQQ, I mentioned this last week, I felt like the exhaustion was already here. And SPX, I felt like wasn't there yet, but was approaching. And now I fully think we're essentially in that exhaustion phase in both markets. So this is where it gets more interesting. You've got that RSI divergence in the QQQ. You've got the NASDAQ checking most of the boxes as well. Uh, Now I don't know if I'll skew fully bearish, more bearish trades than bullish, but I'm not too far from that. Give me some confirmation, start to roll over, give me some idea that that's happening, and I'm probably going to keep layering on a few more bearish trades here and there and get my portfolio skewed that way in the not too distant future. Now, CPI on Tuesday, expect a big hurrah just because, again, you're guaranteed to see a big drop down. Now, it could disappoint. They could have been expecting a bigger drop, and it was, instead of a huge drop, it's only a big drop or something like that. But a big drop in the annual CPI is coming. The White House and others are going to tout this as a huge drop because we're getting rid of that 1% June number from last year, and we're going to put in a 0.2 or a 0.3 or whatever. So you're going to see a big drop. FOMC meeting on Wednesday. The Fed is likely to pause at this meeting. And then there's a wonder if the Fed is going to go back to rate hikes or continue to pause in the following cycle. But I think the market's got that right. They're probably going to pause for this meeting. And again, that's part of why the markets, I think, are cheering on stocks. So Adobe, Kroger, Lennar, we've got a few different earnings reports this week, but nothing too impactful that way. The markets are going to be watching CPI and the Fed meeting closely. Thanks again, everyone, for joining us. Hope you enjoyed the market roundup, and we will see you next time. Goodbye, everyone.